Hey, good afternoon, traders, and Happy New Year. This is Trader Tim from over at eMiniMind doing a trade recap video for the 4th of January, first trading day of 2021. If you haven't done so already, you can check out my Success Hacks blog post over at, if you go to eMiniMind and scroll down to the bottom, you can find it there. Just a host of different things that have helped me become successful in my athletic career that have very nicely transferred over to the trading world. So you might pick up a few nuggets in that post. Also, it's a great time to review your trading data, go through last year's trades, see if anything stands out to you, see if there's any ways that you can clean up or simplify your trading, making things a little bit more streamlined. You'll find that in bull markets like we had this last year, market being up, um, your trading doesn't outperform quite as well as it would if it was, say, a bear market where you'd have a lot more flexibility to make a lot of gains. So if you're comparing your returns to the S&P, just know that the type of market that we're in can have a impact on how well you outperform. With last year having such a big dip and swift recovery out of that decline, you know, rather than try and trade intraday heavily on some of these bigger down days, I like to use the decline as a whole as a way to put on some longer term positions. So, as traders, you typically have a lot more cash at your disposal because you're using that cash to be in and out of the markets intraday. And so when we have a big sell off, I see that as an opportunity to take some of that cash, pump it into the market, whether it's adding to longer term, positions in your retirement account, which I like to do, or put on some longer term swing trades. The risk is a lot lower when you've come off highs and made a pretty sizable drop. And so 2020 was a pretty great year in that respect. We had also the huge jump in Bitcoin as well. I've taken the last couple of days to actually sell off some of my Bitcoin and looking, I was hoping to be able to buy some more in bigger size lower, but we had a little bit of a dip today down to, I think we got down to like 28,000, but it's not looking super great. So I've been selling off my Bitcoin and buying up a lot of Ethereum, and hopefully we can get a little bit of a decline and buy up some more in bigger size here over the next few weeks or months. But I would not be surprised if we see a Bitcoin 100,000 by the end of the year. So let's take a look at the S&P, and market's about to close here for the day. If we look at where we're up at the negative 23% target, and that's a great place to have the market give us a little breather. If we draw up the next retracement, we can see that it kind of puts us, just slightly below these prior highs here. Uptrend by and large would still be intact if we go out to like a weekly chart. So even a pullback to that next 50% is still pretty bullish. But on the way down, the first thing, coming into this year, I wanted to look for a way, or I know how I'm going to do it with buying puts, but looking for the opportunity to hedge my longer term investments. And so we were graced with the great opportunity this morning of gapping up actually at highs at the open, and a nice slide through most of the day. So being able to put on those puts right at the open, I didn't want to put them on last week on Thursday, just because you've got Thursday, Friday, Saturday, Sunday, all of that time decay just eating away at you. So I was a little bit concerned that we might have a gap down this morning, but come to behold, lo and behold, we had a gap up. So nice way to start off the year with a good hedge in place. If we do come up and take out the 61.8 on this bounce, I would look to take it off and then just take profits on what I got and assume that we're going to be going back up into new highs, and that's fine too. But I prefer to put on the hedge as opposed to take off the long-term position, because if we do rally, then I have to put on the long-term position again, and it's just a lot more advantageous to do the short-term put hedges. So had that going this morning. Let's go over to the ES. Well, before we do that, let's take a look at the uptrend line here. If we connect these lows, we have a really nice bounce off of this uptrend line. And at the same time, we've got a bit of a widening formation. And a widening formation, if we connect these highs, something like that, and then these lows, where we're just making higher highs, but at the same time making lower lows, that tends to lead to more volatility and potentially a reversal. Whereas an ascending triangle, where we're converging at an apex, getting tighter, like we did back here, this would tend to lead towards a continuation. So the trend was up, we consolidated, and then we continued higher. Whereas we're currently sitting in this widening formation, and we could potentially see a bigger decline. So with this uptrend line so clean and clear, if we break below it, then I would definitely look for to add to that short hedge or to put on a new short trade. But if we had something like that where we came down, something around here and then bounced to the underside of the trend line, that would be a great opportunity to put on a short. But first we have to break the trend line. Today, if we look at kind of how we closed, we did bounce off of this long 50% in the afternoon. Didn't quite make it up to the 50% short. So essentially we're just in like a bear flag. So potential to roll over here and go lower tomorrow. We'll see how things play out in the overnight. Let's go back to the ES and stay with that for a little bit. Today, if you look at the 15-minute chart, you can see we really did not break above the prior candle's high all day on the way down. And when I'm coming into the day, if I go to the daily chart for just a minute, I like to look at the prior day's high-low close, as well as where did we trade in the overnight, and we actually traded much higher in the overnight trade than we did in the trading hours only. And then you notice I marked the swing low from this day back here on the 29th. And you can see once we broke that, that was only made up for like half of the day. So we didn't have a great 50% retracement to be able to short into this morning. Well, I take that back. There was one, but let's walk through it here. So if we take the first high to low of the day, we didn't touch the 50% short, but we did come down and essentially complete its target. And so if you use the swing high from here down to lows, we did trade at the halfway back, and it was a little bit messy, not really a strong sell-off right on the first touch, and we actually had a low ticket lows. So I chose not to take the short here because we were sitting in a low ticket lows and the potential to go higher. But once that broke, now that confirms the sustained downtrend. When you have a low ticket lows and then it breaks a low, or a high ticket highs and it breaks a high. When I say high tick or low tick, I'm referring to the NYSE tick over here on the left. When you get that break of a high ticket highs or a low ticket lows, then that's when you go into the sustained downtrend, and then you don't want to be buying up low ticks or in a downtrend. You selling high ticks in the downtrend is fine, but not buying and trying to catch a falling knife. So once you break lows, what you can do is just look for the retracement that has a high above the low and a low after the low, and take that, kind of lines up right at the low. You can also just take the next retracement that it gives you. So a handful of opportunities to just get in with the trend once we confirm that we're sort of heading in this sustained downtrend. Um, so going into the rest of the week, be looking for this uptrend line to hold. Uh, Possible scenarios: we have an inside day tomorrow where the high and low is just contained within today's high or low. If we do go lower, I would also watch for the potential for a hammer to form where we have this V intraday and then we close near the open, and we kind of put in a hammer that has a tail that dips below this uptrend line. But more than likely, with today's selling felt a lot like profit taking, just the sustained slide down and then being able to rally a bit into the close. So if we can break today's low tomorrow or Wednesday, we do have the potential for some bigger body candles and a quick move to start the year down to the halfway back long. So we'll be doing tomorrow morning, Tuesday, doing a live trading session. You can check that out over at emoneymind.com/VIP. And I wish everyone a good start to the new year and happy trading.